accounting equation. Accounting equation भन्नाले assets is equal to shareholder equity plus liabilities. Anytime any transaction, assets is equal to corresponding shareholder equity plus liabilities. Assets, what do assets? What is assets? Assets भनेका के हुन् भन्दा given assets cash is assets, bank, debtors, receivable, bills receivable, note receivable, account receivable, prepaid expenses, machinery, goods, furniture, office supplies, merchandise is related of assets. Just a shareholder equity. Shareholder equity, all assets are capital. All assets are capital, all assets are shareholder equity, but all shareholder equity are not assets. अब यहाँ सबै assets shareholder equity हुन् तर सबै shareholder equity assets होइनन्. So profit and loss show in shareholder equity. Just liabilities, loan, creditor, bills payable, account payable, note payable, must be pay money, must be doing any work on account is credit transaction, all things are related of liabilities. So assets is equal to must be equal to shareholder equity plus liabilities. Next transaction number 1. Investment of cash by shareholders or start a business. Start a business with cash, start a business with bank, start a business with furniture, start a business on cash, everything. Start a business and increase of assets. Increase investment of any shareholders, increase the assets corresponding, increase the shareholder equity. Number 2, issue of promissory note to take loan or purchase on credit. Take borrow loan, increase a take a loan, increase a cash is assets, so increase a assets corresponding, increase a liability because must be pay money. So note payable is liabilities. Next number 3, purchase of an assets for cash. Purchase assets for cash. Assets, what's coming? Purchase assets coming. Assets is assets. What goes out? Cash goes out. Cash is assets. Both side effect is assets. No effect of shareholder equity and liabilities. Next number 4, service provided on account. On account means credit transaction. Credit transaction on account. Service provided means service revenue. So service provided on account. What's coming? Bill receivable coming. Bill receivable is assets. So increase a bill receivable corresponding increase a shareholder equity. So next number 5, service provided for cash. Service provided means service revenue. For cash, what's coming? Cash coming. Service revenue means service revenue, sales revenue is income. Cash income, cash is assets, increase the assets corresponding increase the shareholder equity. Next number 6. Number 6, receipt of cash in advance for customers. Receipt of cash, what's coming? Cash coming, cash is assets. In advance must be paid any work. कुनै काम गर्दिनलाई हामीले एडभान्समा क्याश लियौं. कुनै काम गर्दिनु पर्छ भने increase of liabilities. Just name is on service revenue. Number 7, payment of expenses. Expenses means wages, salary, insurance, discount, commission, everything is expenses. All expenses are increase of what goes out? Cash goes out. Decrease of assets corresponding decrease of shareholder equity. Next, purchase stock, purchase office supplies, purchase of merchandise on for cash. Cash मा हामीले purchase गर्यौं भने what's coming? Office supplies coming. Office stock come in, merchandise come in, parts goes out, cash goes out. Office supplies is related of assets, cash is related of assets, both side effect is assets. Next, number 9. Purchase stock, purchase supplies, purchase merchandise on account. Account means credit transaction. Purchase stock, what's coming? Stock coming. Purchase office supplies, what's coming? Office supplies coming. Office supplies is related of assets, increase the assets. On account credit transaction related of liabilities must be pay money. Account payable must be pay anything. So liabilities increase or liabilities. Increase the assets corresponding increase the liabilities. Next, insurance policy. Number 10, insurance, purchase of insurance policy for cash. Insurance policy, prepaid insurance, what's coming? Prepaid insurance coming. Insurance coming, insurance is expenses, prepaid insurance is assets, both side effect is assets. What goes out? Cash goes out. Cash is assets, both side effect is assets. Number 11, payment of dividend. Payment of dividend, paid means goes out. What goes out? Cash goes out. Decrease of assets corresponding decrease of liabilities. Next, number 12, purchase return and return outward. Stock return to supplies, purchase return. Purchase return, stock, decrease of stock corresponding decrease of liabilities. Sales return and return inward. Sales return, what's coming? Stock coming. So increase the stock, decrease of account receivable. Stock and account receivable both related of assets, so effect of only asset side. Number 14, cash drawn by the owner for personal use. Any personal use. Cash withdraw from bank for personal use. Tax paid for owner. Everything's only personal use is expenses. All expenses are what goes out? Cash goes out. So decrease of assets corresponding decrease of shareholder equity. Next, interest on capital and interest on drawing. Interest on capital and interest on drawing both related of shareholder equity. Interest on capital is shareholder equity, interest is shareholder equity, both side effect is plus minus interest on shareholder equity, interest on capital and interest on drawing. Next, number 16, outstanding expenses. Outstanding expenses must be pay money. Outstanding means कसैको काम गर्दिन बाँकी छ, कसैलाई पेमेन्ट गर्न बाँकी छ भने यस्ता एक्सपेन्सेसहरुलाई आउटस्ट्यान्डिङ एक्सपेन्सेस भनिन्छ. Outstanding expenses increase our liabilities, decrease our shareholder equity. Next, wages. Expenses. Expenses mean wages, salary, rent, commission, discount, bad debt, insurance, depreciation, dividend paid, interest are etc. Interest are related of. So income. Interest received, rent received, commission received, dividend received, bad debt covered, appropriation of fixed asset, discount received are related of income. So income is increase of assets corresponding increase of shareholder equity. Expenses is decrease of assets corresponding decrease of shareholder equity.